It's Monday, October 27th, 2025. Welcome to your news update on Blip Brief, small but almost everything updated every weekday. Okay, let's dive straight in. Last session's close saw the Indian indices finally, hit the brakes a bit after that incredible October rally.
Exactly. Both the Nifty 50 and the BSE Sensex ended down about 0.4%. Now, that's not a huge drop percentage-wise, but the context is key.
Right. The Nifty climbed, 1,500 points this month? That's a massive move.
Huge. So this dip is pretty widely seen as profit-taking. It's testing the strength, the psychology of this bull run.
And you mentioned it's testing options traders. That sounds intriguing. Why is this minor pullback such a big deal for them specifically?
Well, think about it. When a market rockets up 1,500 points almost vertically, volatility just sinks, right? People get a bit complacent.
Sure.
So this dip, it forces those traders to suddenly reevaluate their positions, their hedges. We're seeing a noticeable uptick in activity in those deep out-of-the-money puts.
Expensive insurance, basically.
Precisely. It suggests that even if the long-term view is still positive, the smart money is quickly buying protection against a sharp correction, something they weren't really worried about just last week.
So the complacency is cracking a bit, fragility creeping in.
You got it. But while caution was the word elsewhere, the metal sector clearly didn't get the memo.
No. A big outlier. Nifty Metal, BSE Metal indices both climbed a solid 1.0%.
Yeah, strong performance. It looks like expectations around industrial demand are just, well, disconnected from the wider market jitters.
A classic rotational trade, perhaps. Money looking for a safer home.
That's a big part of it. When the heavyweights in other sectors take a breather, capital flows elsewhere, and metals offered that fundamental story.
But speaking of heavyweight stumbling, who are the main laggards dragging the indices down?
Well, pharma was definitely weak. Cipla dropped 3.7%. And consumer staples also felt the pressure. Hindustan Unilever fell 3.3%.
Seeing consumer staples fall like that is interesting. They're usually seen as pretty stable anchors.
Right. It suggests the profit-taking wasn't just confined to, high-growth stocks. It was quite broad-based.
Financially.
Also saw some pressure. Kotak Mahindra Bank was down 1.7%. But if you zoom out and look at the Q2 banking results overall, the picture is actually quite strong, though mixed.
Yeah.
HDFC Bank and Kotak really shone this quarter. They showed solid execution, good lending growth, kind of reinforcing confidence in the larger private banks.
But not everyone joined the party, right?
Yeah.
Using Bank stumbled a bit.
It did. And that serves as a reminder, doesn't it? Even in a generally positive environment, operational execution and asset quality are critical. Not every bank shares the same upward path.
Absolutely. Now, shifting gears to corporate strategy.
Mm-hmm.
This Marks & Spencer news with TCS, terminating the IT service desk contract.
Yes, and the timing is notable, coming just months after M&S had that cyber attack.
TCS is certainly denying any link, though. They're saying the contract end and the cyber incident are completely unrelated.
They are. But, optics matter. Losing a major global client after a high-profile security event, regardless of the actual cause, it raises questions.
It certainly forces a conversation about risk in IT services, doesn't it?
It really does. It suggests enterprises are becoming perhaps less tolerant of any perceived security lapse. The margin for error seems to be shrinking. Clients might be quicker to act if confidence takes a hit, even without definitive proof of blame.
Okay, let's pivot to capital raising. Despite the index dip, investor appetite seems, pretty healthy.
Oh, definitely. We're seeing real optimism from overseas fund managers. FPI, foreign portfolio investment, optimism is actually at a 3-month high.
Wow. And the street is buzzing about the Lenskart IPO, right?
Absolutely buzzing. It's a huge one. 7,300 crore IPO set to open October 31st. And they're aiming to raise a significant chunk, 4,150 crore, just from the fresh issue.
That's a strong signal.
It really is. When you see foreign money hitting highs and big offerings like Lenskart lining up, it suggests global investors see this current market volatility as more of a short-term thing, not a fundamental problem. They're eager for these Indian growth stories.
And that appetite makes sense when you look at the bigger picture. The IMF projecting 6.6% growth for India in FY25.
Yeah, and notably set to outpace China's growth, even with all this global tariff uncertainty swirling around.
So what's underpinning that resilience?
A lot of it comes down to the massive domestic push in infrastructure and manufacturing. Take the maritime sector, the government's targeting an incredible $10 trillion in investments at Maritime Week 2025.
$10 trillion. That's huge. What does that cover?
Everything from upgrading ports to building greener shipping capacity. It's a foundational investment aimed at really cutting logistics costs long term.
And policy support, too, right? I heard talk about infrastructure status for aircraft manufacturing.
That's right. It's under consideration. Granting it would be a game changer. Huge financial incentives, easier lending, tax breaks, all designed to attract the kind of long-term capital that sector desperately needs.
If it feels like part of a larger strategy.
It is. India is not just aiming to be a generic factory, it's attracting high-value manufacturing. We're seeing global luxury beauty brands like Shiseido planning to scale up manufacturing here.
Joining others like Estee Lauder.
Exactly. They see India as the world's fastest-growing beauty market. It's a subtle but important shift, potentially moving some premium production away from traditional hubs like China.
And on the global stage, trade diplomacy is active this week, something that often flies under the radar.
Yes, crucially. Commerce Minister Piyush Goyal is in Brussels, the focus, advancing talks on the India-EU free trade agreement.
That FTA negotiation is key, isn't it?
Absolutely vital. The EU is a massive trading partner. A good FTA could unlock huge market access for Indian goods and services, slashing tariffs, streamlining regulations, especially important for IT and pharma. It's a major potential growth driver.
From trade deals to the digital frontier, Reliance Industries is making a massive bet on AI infrastructure.
Massive is the word. We're talking $12 to $15 billion earmarked for AI infra.
Including a 1GW data center. That scale is immense.
Colossal. It really highlights the push to build a powerful domestic AI ecosystem. The goal is scale, but also sovereignty, reducing reliance on foreign players for critical AI computation and data storage.
Okay, let's widen the lens now. Connect this to the global markets. Starting in Asia, euphoria in Japan.
Incredible scenes. Japan's Nikkei index crossed the 50,000 mark. First time ever.
Wow. What's driving that?
Primarily, it's optimism about the new prime minister's expected economic stimulus package. Investors are betting heavily on growth-focused policies, hoping to finally shake off deflation and boost consumption. It's a huge wave of confidence.
Interesting. But while equities surge there, safe havens are pulling back. Gold dropped 1.7%. What's the connection?
Simple. Optimism dampens the appeal of safe havens. News broke that top U.S. and China negotiators have agreed on a framework for a major trade deal.
Reducing that geopolitical risk.
Exactly. When the threat of a full-blown trade war eases, gold's appeal as a protective asset just cools off, especially from recent highs.
Makes sense. But oil prices went up. What gives there?
Two things, mainly. First, that same positive U.S.-China trade news boosts the global growth outlook, which implies stronger demand for energy down the line.
Okay.
Second, new U.S. sanctions were announced targeting Russia's top oil firms. That creates at least the perception of tighter supply in the market.
But will those sanctions actually cut global supply? Or is it more about hurting Russia's bottom line?
The consensus is it's more about revenue. It'll likely force Moscow to offer even steeper discounts to keep its oil flowing, even if that oil finds buyers through alternative channels.
You mean the so-called dark fleet?
Precisely. Older tankers, often operating outside typical insurance and regulatory frameworks. They keep the supply moving to certain markets, bypassing many sanctions.
Interesting phrasing. And speaking of Russia, President Trump apparently claimed India is cutting back its Russian oil purchases completely.
Yes, that claim was made over the weekend. Needs verification, of course.
Okay. Shifting to currencies, the U.S. dollar gained ground against the yen.
It hit a 2-week high. This is ahead of some key central bank meetings and also President Trump's high-stakes trip to Asia. Lots of moving parts there.
And underlying this, there's a fascinating long-term trend in how central banks manage reserves.
A really critical one. Since about 2017, there's been a consistent pattern. Global central banks have been reducing their holdings of U.S. Treasury bills and simultaneously increasing their gold reserves.
Why 2017 as the turning point? And why this sustained shift away from T-bills?
Well, 2017 saw heightened concerns about, let's say, the potential weaponization of the dollar, alongside increased geopolitical volatility linked to the U.S., so it signals a strategic diversification.
Moving away from dollar dependence.
Essentially, yes. Central banks are prioritizing assets like gold, which carry no single country's sovereign risk as a long-term hedge. A hedge against inflation, yes, but also against potential sanctions pressure. It's a quiet, ongoing vote on global financial stability.
Very interesting. And quickly, a political update from South America, Argentina.
Yes. Javier Milei's party scored a significant victory in the midterm elections there.
What does that mean for him?
It significantly boosts his mandate, gives him more political clout to push through his pretty radical economic reforms aimed at stabilizing Argentina's finances and moving away from decades of Peronist policies. Creditors are watching very closely.
Right. Now, for our innovation nugget, and this really ties back to that huge reliance AI investment we talked about, the soaring energy cost of AI.
This is becoming the elephant in the data center, truly. A recent Goldman Sachs report, quite startling. It projects that these energy-hungry AI data centers could drive a 160% surge in global power consumption by 2030.
Wow, 160%.
Yeah.
That's staggering. That's not just an increase. It's a fundamental challenge to our power infrastructure.
It absolutely is. It means every nation heavily investing in AI, the US, India, everyone needs to urgently rethink power grid capacity right now.
Because if we don't have the massive scale and ideally clean energy to fuel that kind of growth.
Then the AI boom hits a very hard, very expensive ceiling. The race for AI supremacy is rapidly becoming a race for sustainable, large-scale energy generation.
It changes the game entirely.
It does. The constraint isn't just compute power anymore. It's electricity, reliable, massive amounts of it.
So it's not just about who has the fastest chips, but who can build a data center next to a reliable 1 gigawatt power source.
Right.
The data center is the new power plant, in a way.
And that ultimately is maybe the biggest takeaway for you to ponder this week, how this huge tech revolution is forcing an equally massive revolution in energy and infrastructure. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.